Welcome, everyone. Thank you for joining us today for another Monday meeting. Today we have Pension Insurance coming in and they're giving a presentation on what they do as a firm. But before we get started, Isaac and I just want to give you some quick announcements of what's coming up this week. Let's go ahead, Isaac.
Right. So we only have actually one announcement this week, or upcoming event. It's tomorrow. We have a meeting with Coles Resnick from 5 to 6 p.m. So, yeah.
All right. Just one last reminder, if you can, our professionals love to see your faces. So turn on your cameras if you feel comfortable, and we'll get started with the presentation. Please leave your questions towards the end and you can put them in chat. And I'm going to pass it over to Scott and Nala.
Thank you.
Thank you so much, Chad, Isaac, Gohart. You guys are making this pretty easy and streamlined with the pandemic going on. So awesome job and the hard work and everything. So other than that, hi everybody. It's good to actually see you and do a sort of recruiting event with CSUN and see that the recruiting scenario is still alive and well at CSUN. Just generally, pension assurance relies very heavily on the candidates that come out of the accounting program there. And I'm happy to see you all here and wanting to hear about pension assurance, what we do. And I'm, Hala and I are very excited to share what we do. So give you a little insight at what we do and, hopefully you consider us as a future employer, and we'll get to talk about, what makes us different compared to other firms you're probably looking at. And hope you learn something out of this presentation. So let's go ahead and begin. Give you a little background in case you guys haven't heard about pension assurance. So we're a fairly young firm. We started 6 years ago, back in 2014. Just straight off the bat, what makes us different, we're a single service accounting firm. So that means we only focus on one thing, and that is doing audits specifically for retirement plans. We do that all year long. We're a specialist firm. We pride ourselves on being probably best in the market, very knowledgeable about this. We know what we're doing inside and out, and that provides us with a lot of efficiencies, a lot of work-life balance and flexibility. This year has been really crazy with just 2020 going on, and it sounds like it's been kind of streamlined across the board. But I will say the partners have actually been trying to be as understanding as they can. But it has definitely been a tough year even for ourselves as well. And I think that's going to be sort of an ongoing thing with COVID going around. But, we're still here. We're still happy. We're still growing, and these are good problems to have. So during 2020, we did, and we're probably going to complete about 600 retirement plans this year. We're a team of 35 people doing 600 audits. So that is a huge number, big number, small number, and it's a big achievement for just the size of us and what we have been able to accomplish. So that's making us, I think, approximately the second largest firm doing this in California, and we are definitely one of the fastest growing firms in the country. We're growing at a pace of about 100, 150 new audits every year. So next year will be around 700, maybe 750, and there's really no sign of that stopping. Given some background on who's presenting here, so myself, and Alla, both of us are CSUN alumni. Our hearts are dear to the campus, to the program, to the faculty there. We were both very active in Beta Alpha Psi and Accounting Association. We were both executives, directors of Wednesday Technical, meeting directors, so we're very familiar with what Chad and Isaac are doing here. This is probably one of more difficult directorships, so there's definitely a lot to be said for volunteering and taking on those responsibilities, and it speaks to their ambitions. I have a background at EY, started right out of college, and all same over at Deloitte for 2.5 years there. So let's jump into our areas of discussion here. So obviously we are specialized, so we don't want to bore you too much with the details, but it's going to happen. So hopefully you had your coffee this morning. So we'll try and just do an overview of an audit, which is sort of universal, not just limited to what we do. So let's dive in there, and then we're going to go into some specifics about what makes us different and how our process is different. So universally in every audit, it's going to be the same no matter which accounting firm you end up working for. If you end up going into public accounting and choose to be an auditor. 3 steps being your planning phase. This is where you're going to be doing your risk assessment, trying to figure out, okay, what are the big areas of this audit that I need to be paying extra special attention to? Is the client a good client? Are they a shady client? Should we accept this engagement? Should we not? Do we have enough resources? Those are sort of the considerations that we're looking for in our planning phase. In the execution and fieldwork phase, so this is where we are going to be doing the actual testing. So this is, okay, if you say this is supposed to be A, give me support showing that it is A. If we see, any sort of differences or exceptions, we're going to be documenting, identifying why did the problem happen, as well as providing recommendations for correction or any sort of suggested adjustments as well to their financial statements. And obviously, if what I'm saying goes over your head, don't worry about it. Just try and absorb as much as you can. I'm speaking a little bit like an auditor here, but this is the language of the business. And concluding and reporting here. So these are essentially our products. An auditor is paid for the final report that we provide, the opinion letter. So we are doing all this work to essentially come up with a auditor opinion to provide the client. Typically it's 2 to 3 pages, and that's it. So let's get into our details here. What is an employee benefit plan and what makes it different? So what sort of retirement plan requires an audit? Why does pension insurance exist, essentially? So this is a requirement by the Department of Labor, and this was sort of established back in a rule dating back to 1974. Ever since then, the Department of Labor is saying, okay, any plan that has more than 100 people generally is going to be required to have a retirement plan audit. The reason why is, I always like understanding the reason behind all this, is retirement plans is one of the largest pools of money in the United States that house pre-tax money. So the government's interest in it is are these amounts accurate? Are these people that are stashing away trillions of dollars really truly just doing it to avoid paying taxes, or is it is it accurately stated? The other interest in it is for the employee's interest too. They want to make sure that companies are operating these retirement plans for their employees' benefit and doing it accurately. So obviously the Department of Labor may not have as many resources, so they brought in the help of CPAs to do an independent audit on these. And so we unofficially act as an extension of the Department of Labor for this reason. The other requirement is, so there is a tax form called the Form 5500, Department of Labor tax form. It's more of an informational form. So it's looks kind of like what you would see and expect in a normal tax form. And every retirement plan is required to file this, and this is public knowledge, so you could Google this and find any sort of Form 5500 for any company you're looking for. So in order for them to have a complete filing, they have to attach an audited financial statements from a qualified CPA firm, if they're considered large, for it to be a complete filing. If they don't have it, it gets rejected, and typically the DUL starts sending angry letters to that company, also threatening fees and penalties. Our purpose, kind of what I was mentioning earlier, we want to provide an opinion that the numbers and the financial statements of the retirement plan, essentially how much of employees' money is being housed in this 401k plan or other retirement plan option, is being accurately stated. Are we sure that, if there's $1 trillion in there, is it really $1 trillion? That's a lot of money. It's unrealistic, actually, but just throwing a random number out there. And we, like what I was mentioning, we are making sure that they're in compliance with laws, regulations, and making sure, employees aren't being shortchanged by the company. So you probably have been introduced to some in your classes, but there are a lot of different variations of benefit plans. So we have a bunch listed here. Believe it or not, these aren't all of them. There's even more. So we focus primarily in the 401k market because it's just the most common. I would say probably close to 80 or 90% of our clients of our 600 audits that we perform are 401ks, and the remaining falling into these other buckets, the 403b plans. So these are for your not-for-profit or nonprofit entities. ESOPs, it's kind of a unique plan where employees' money is invested in the company's stock, so their retirement entirely depends on the company's well-being and growth. Money purchase pension plan, this is a agreed upon contribution the company makes on their participants. Health and welfares are typically more for insurance and medical, dental, and those sort of benefits. They also have other things in there too, but if you've taken your Accounting 352 class, you probably get introduced a little bit to your defined benefit pension plans, and you start understanding the underlying accounting for that, corridor rule, those sort of items. Those journal entries and that sort of analysis is important because it pops up on your CPA exam. So hopefully you pay attention there. I know I have seen a simulation myself on defined benefit pension plans. All right, so let's dive into our planning here. So I kind of spoke a little bit about this earlier. The planning phase of an audit is important because this is what's really going to be determining what the outlook of the rest of your audit is going to look like. What are we going to test? What are we going to focus on? How many of a certain sample size are we going to test? What comes into scope? What comes out of scope? What is our scope? How do we determine materiality? So if you have $100, is $10 going to be material? Probably. That's 10%. But if you have $1 million, is $10 going to be something that you're going to be caring about? Probably not. That's chump change. You can drop that on the concrete and you'll be fine. We're going to be looking at internal controls as well. So this is, if you haven't taken your auditing class, you may have not heard of internal controls. Generally speaking, internal controls is what are the established processes in place at a company to make sure that things are accurately being processed and reported. So for our sake, we're really focused on payroll controls. How do we know that, you know, your timesheet gets entered into payroll properly and that your paycheck is accurate? So we're looking very closely at those processes, who's doing reviews, what checks and balances are in place. We're also doing some considerations of management's integrity. So this is kind of a tangent but related aspect when we're asking them, okay, are we going to be able to have communications with anybody in the company? A big red flag is if we're talking to the CEO, they're like, no, you can only talk to me. You can't talk to the CFO or HR person. We're like, well, they're involved in the process, so we probably do need to talk with them at least some, but they're like, no, I only want you to talk with me. Doesn't necessarily mean it's wrong, but it is going to be something that we'll consider and be cautious about if we're moving into that audit. We'll also typically, if they had an auditor previous to us, we will speak with them to see if they had any issues with management, or if there's anything that we should be looking at. So CPAs talk with each other, cross firms too, to make sure that, and this is a required auditing standard whenever there is a change in auditor, to have those communications. You know, a predecessor auditor that you know lost a client isn't going to be hiding any secrets if they're not having to deal with the client anymore. And then written representation. So this is management willing to tell us that they've communicated everything accurately, and they in good faith, and they're not hiding anything, and are they willing to do it legally in writing? So this is something required for any audit, regardless of what kind of audit it is. It's usually always the last piece of support you'll receive in an audit. I'm sure Ala will touch on it later when we get to our concluding phase. The other part of the planning, so as I was mentioning, we're going to be talking about, is our firm equipped to do it? Do we have, you know, say we come across an extremely technical audit. Do we have enough capacity? Do we have enough hours on our team to actually complete the audit? So these are questions that we'll be looking at as well. Conflicts of interest. Does somebody's family member or husband or wife work at the company that we're trying to hire? Doesn't necessarily mean we can't accept them, but it means that we'll have to have additional processes inside of our firm to ensure that those individuals don't work on that audit, because it does create for some pressure, some opportunity for, you know, overlooking something, not doing our job properly. Kind of going back to management's integrity. I know I've been talking about it a good bit, just sharing numbers. I think I've only come across this question twice in my years auditing where I've had to question management's integrity. It's not very common. Companies in general have good owners or good executives that do care about their employees and fully transparent and open. Auditors are mainly in there to try and find errors, mistakes, not necessarily trying to catch the fraud or you know, become private investigators. We're there to ensure that, you know, there aren't any big mistakes that people are overseeing or missing, because when you're in the details, you may not see that. Are there any risks associated with providing professional services to the client? So risks in this sense can be internal and external. So say Enron was around and they had a retirement plan and they hired us to audit Enron's financial statements for their retirement plan. Like, are we going to want to take on that risk of hiring and auditing their retirement plan? Maybe not. Maybe we'll pass on this one. You know, I'm trying to think of Wirecard was the other big fraud scandal that came out recently, the UK-based thing. So are we going to be auditing Wirecard's retirement plan? Obviously, they're international, so they won't have the same retirement plans as us, but these are sort of the questions you're going to be asking. What industry are they in? What's their public appearance? Is it worth it? Fraud, legal acts, so we're all accountants because we want to get paid. We want to have a stable job. What's the point of doing work if we don't get paid? So maybe we have a client, they're like, hey, we're bankrupt, but we need an audit. We're like, well, how are we going to get paid then? Why would we do the work? I mean, sure, there are charitable things. You could probably turn it into a charitable deduction for services provided, which does provide for tax benefits on our end, but most of the time we don't need those deductions. So, let's see here. Got a couple more slides before I send it over to Ala. Analytics. So this is an area of auditing, more so outside of our field, but definitely at Big Four, mid-tier firms, your normal public accounting firms. Analytics has been a growing subject in terms of audit documentation and testing. And this is essentially taking a very scientific approach and detailed analysis into looking at numbers and how they change. And you take into consideration qualitative factors. So, okay, I know the company had grew about double the size in 1 year. So that means when we're looking at numbers and growth, you would naturally think that, okay, I would expect for numbers or activity to double in correlation with the size of the growth of the company. And so you can do tests over that sort of qualitative data into quantitative analysis, and that provides you with very strong evidence that things are operating accurately, normal. One of our big tests is that first one right there. We're comparing what's the performance of the investments in the retirement plan to the S&P 500, which is sort of your staple index account. And so we can kind of look, all right, how did these 500 investments perform for the full year? Take that percentage, put it and compare it to the plan's performance. And that will give us a good assessment. Okay, is the plan underperforming? Is it overperforming? Why? Is it because it's being poorly managed? Is it not proper oversight? And it provides us with insights before we even do our testing on areas that we might need to look closer on, areas that we can provide recommendations to, maybe have a financial advisor that's not performing up to par to where they should be performing. So that's what we're going to be looking at there. SOC 1s, not too sure. You'll probably hear this in your audit class 2 460. SOC 1s is essentially another audit performed by another CPA firm outside of us, and it's over the controls and if they're operating effectively at a service provider. So retirement plans have lots of options for which service provider do they want to invest their millions of dollars in tax-free. How do we know that that company isn't mismanaging that money? How do we as auditors feel comfortable that the reports that they're providing to us is accurate? So we receive these SOC 1 reports, and it's essentially an audit on their process, telling us, are there any issues at this client that we should, or at the service provider that we should be looking for? If there are issues, how does that affect our audit approach? Can we rely on the data that you're providing, or do we have to put in a lot more legwork? Do we have to, expand our sample size just to make sure that we are providing accurate coming up with an accurate opinion on our financial statements. Materiality, of course, that's the, you get tossed that all the time. Everything's immaterial. Materiality is a moving number. It depends entirely on what is important to the users of the financial statements. Plan assets is specific to our case because that's the money that essentially is going to be paid to people as they retire. So that's where we're going to probably be focused on, and that's what people are going to, if they're looking at our financial statements, they're going to care. Okay, how much money is there? And that's materiality. And my last slide here before I send it over to Ala. Plan document review documentation. So this is a unique aspect of benefit plan audits, which is benefit plans. So these are your bylaws, your rules, and how the plan should be running. If it says that company or employee contributions, so employee money should be matched, half of what you put in will be matched up to 5%. We're going to be testing to make sure that that's actually happening. If people can take a distribution prior to retirement, we'll test to see, okay, did that money come out meet these eligibility qualifications? If somebody's taking a loan out of the 401k account, are they allowed to take that loan? So these are basically the rules that say what is allowed and not allowed in a retirement plan. And we test for that, which requires us to read. There's lots of reading. We're required to read these lengthy, sometimes very painful legalese documents and get a clear understanding of how these work. Planning meeting. So this is usually a call that we do with the company as well as the people on our team, where we're going to get an idea of what's going on their end. Is there something that we need to be aware of on their end that we should adjust for on our side? Maybe they are merging and there's multiple companies getting involved. Maybe payroll is being performed not by one person or one center, but multiple locations. These are all things that we need to consider when we're developing our audit strategy and how we can complete the audit accurately and efficiently. All right, so that's done with planning. I'm going to be sending it over to Ala here. So.
Thank you, Scott. So just to recap, as Scott mentioned, there are 3 steps to an audit, or stages to an audit: planning, execution, and concluding and reporting. So I'm going to cover execution and concluding and reporting. So execution usually involves test work and field work. So that's when that's the core of an audit. So that's when we start making our audit selections and test participant transactions. So the participant transactions that we usually look at involve enrollments, new enrollments in the plan, loans, and distributions. As for enrollments, the areas that we usually focus on in testing involve, so let's say if I elected to contribute 6% of my salary to my 401k plan each payroll period, is that really happening? So that's why we compare what the participants selected to what we see per review of the payroll records. Another area that we test is if I elected to contribute in pre-tax or Roth contributions. And again, we make sure that it's actually happening, that whatever the participants selected to contribute into the plan. We also test matching contributions. So matching contributions can be discretionary or they can be prescribed by the plan provisions. And if they're discretionary, the matching formula can change from year to year. And that's what we look at as well. Okay, so next slide, please. Okay, when it comes to loans, we need to make sure that every loan transaction that we see that it was authorized by the participant. Sometimes we can test for authorization by looking at the loan request form to make sure that it's signed by the participant, or in nowadays most service providers provide an option to participants to request loans and distributions online on the service provider's website. So in that case, we would look at other documents, including canceled checks, or if we are talking about distributions, it would be 1099-R forms, and again, canceled checks or screenshots of an ACH. We also need to make sure that if a participant is terminated, that that participant's loan has been deemed, meaning that it's no longer part of the ending plan assets, because otherwise our plan assets could be misstated. We also look at, so let's say if the plan document prescribes for, that at any given time there could be one or two loans outstanding. We need to make sure that that's what's actually happening. And also we test for loan repayments, meaning that that loan repayments started within a reasonable time frame. Next slide. Thank you, Scott. Okay, when it comes to distributions, again, we test for authorization primarily, making sure that this transaction was authorized by the participant by looking at the 1099-R form, which is a tax form that is sent to the participant when they when they receive a distribution. We also need to make sure, so for a participant to take money out of the plan, there needs to be a distributable event so that this distribution is tax-free for the participant. So a distributable event could be a termination, or if the participant is active, we need to make sure that there was a valid reason for them taking the distribution. For example, participants can take a distribution once they reach 59.5 years old, as long as the plan provides for that, as long as that is prescribed by the plan document. There are also hardship distributions. So there are certain categories allowable by the IRS when you can take money from the plan. For example, for medical expenses or educational expenses, to avoid eviction from your primary residence and things like that. And we also need to make sure that the plan that vesting provisions are adhered to. So there are different vesting schedules available. Sometimes it could be a cliff vesting, meaning you need to be employed by the employer for 2 years before you can before you become entitled to the employer's portion of the contributions to the plan. Or it can be a graded vesting schedule, meaning, for example, in the case of 4-year graded schedule, you need to, let's say, you become 25% vested after each year of employment, and you become 100% vested upon completing 4 years of employment. So we test for that as well. Next slide, please. Not only that we test participant level transactions, we also perform testing at a plan level. So one of the main areas of focus for the Department of Labor when it comes to retirement plans is are contributions remitted to the plan in a timely manner. So the general rule states that contributions, once they are deducted from participants' paychecks, they need to be remitted to the plan as soon as administratively feasible, but in no event later than the 15th business day of the following month. Because otherwise, those contributions could be, the delay in remitting those contributions can be viewed as a prohibited transaction. It's almost like the employer borrowed the money from participants and used the money for their own purposes. and again, this is a prohibited transaction. And if it did happen, then there need to be corrections made, including calculation of lost earnings on those late deposits. Next slide, please. In addition, we also look at non-discrimination testing, which is required by the IRS. And the main objective of the non-discrimination testing is to make sure that plans are not discriminating in favor of highly compensated employees or key employees. So there are two main types of non-discrimination testing. It's ADP test and ACP test. ADP test stands for actual deferral percentage. That's when we test employee contributions. And ACP test stands for actual contribution percentage. And that's when we test employer money. Next slide. So we, at Pension Assurance, we normally test the non-discrimination test for accuracy and completeness. As for accuracy, we make selections from this non-discrimination test, and we make sure that whichever contributions were listed on that non-discrimination test for our selected employees, that they agreed to the payroll records. As for completeness, we usually compare the contributions per the non-discrimination test to the contributions per the deposit schedule, which I talked about previously, which we usually obtain from the client. And that's what we use to test for timeliness of contributions. Next slide. When we perform an audit, we usually prepare the financial statements on behalf of the client. Normally, it's prohibited because we are not supposed to perform any type of managerial functions for the client. But because employee benefit plans is such a specialized area that very few clients out there or plan sponsors actually know how to prepare financial statements for a 401k plan, for example. So that's why, so this is called non-attest function. And that's why when we send the engagement letter, we have a paragraph stating that it's the client who takes the responsibility for non-attest functions. And when we send the financial statements to the client, they are the ones responsible for reviewing them and attesting to their accuracy, completeness, and things like that. Sometimes we perform compilation of participant detail, and it's common in 403B plans when they have not just one service provider, but they have contracts with all the vendors, and we need to, and those older vendors, they have participant statements, and they could be only available, they're not available electronically. So we need to compile all the data into an Excel spreadsheet and include that in data in building the financial statements for the client. Okay, next slide. When it comes to field work, so the way we do it is different before COVID and after COVID happened. So prior to COVID, we used to go to most of our clients. So, and we would spend about 2 to 4 hours at each client's location, where we would review support for our selections, including bank statements, payroll records, etc. Or we might make we might perform interviews with participants that we selected. So that's how it used to be before. But because we have clients in about 35 different states, and we have 2 offices, so obviously it's difficult to fly out to each client that we audit. So we perform a lot of our fieldworks remotely as well, even prior to COVID. So when we perform remote fieldwork, we just request those items from the client, and they upload those items to a secure folder on Box for us, and we download and we review. And then most of our communication with the client happens either through email or phone calls. Okay, so we are also required to conduct a call on internal controls with the client, and to make sure, so we perform a walkthrough where the client describes what the processes are around the 1K plan, and then we compare to what we actually see when we, for example, for distributions, we would make one selection and we would make sure that whatever the client is describing the processes when it comes to authorization by the participant, by the plan sponsor, vesting provisions, that it's actually happening, and we do see all of those authorizations and things like that. We also use those calls and internal controls as an opportunity to educate our clients on the hot topics for the DOL. So those hot topics include timeliness of contributions and the definition of compensation. As for definition of compensation, so let's say I have regular earnings and then I have a bonus. It's very important to know what's the definition of compensation is per your plan document, because the plan document stipulates whether bonuses should be included or excluded in the compensation on which you calculate the deferrals. If it's not adhered to, it can result in very costly corrections for the client. So that's why it's very important for us to mention that to them during the calls on internal controls, among other things. So next slide. Okay, so the final stage is reporting and concluding. So we normally obtain a complete and accurate certification from the service provider, which allows us not to test earnings. However, sometimes those complete and accurate certifications are not available, and in those cases we must perform full scope audits where we would render an opinion. However, if this certification is available, we are allowed by ERISA to perform a limited scope audit, which means that we can disclaim an opinion, and it's acceptable. It's still a type of opinion, but we are disclaiming it. Additionally, so during the concluding stage of an audit, we conclude on our findings. Were there any exceptions noted in our substantive testing? Were there any issues noted in our walkthroughs on internal controls? And if there were significant deficiencies or material weaknesses, we are required to communicate them to plan management in a written form, in the form of a AUC 265 letter. We also make our recommendations for best practices. It does not necessarily mean that there was a deficiency in internal controls, but as I've mentioned before, we try to educate our clients and we make recommendations for better plan governance. And before we can conclude on the audit and issue the financial statements to the client for them to attach them to their filing with the Department of Labor, we are required to receive a management representation letter where they attest that they disclosed everything they knew about the plan, that the plan is not terminating, that they didn't have any late deposits. So if they did have late deposits, they disclosed it to us and other things. Next slide. So as you study in your accounting program, so there are two main types. There are two types of, not types, there are two financial statements that you are familiar with. Normally it's the balance sheet and the income statement. Well, in employee benefit plan audits, we use a different terminology. So instead of balance sheets, we use the terminology statements of net assets available for plan benefits. And you can see an example on the left-hand side. So the types of assets you would normally see in and this is an example of defined contribution plan, a 401k plan. So the types of assets you would normally see include investments, which can be mutual funds, common collective trusts, pool separate accounts, cash, interest-bearing, non-interest-bearing, etc. There are also receivables, and they are normal participant contributions receivable or company contribution receivables. As for notes receivable from participants, that's just a fancy name for loans issued to participants. And on the right-hand side, you can see an example of the statement of changes in net assets available for planned benefits. So this is an equivalent of an income statement. So so the additions to net assets are in the form of contributions to the plan, either from participants or company. Also interest income on loans that were issued to participants, and investment income, for example, interest and dividends. The deductions from net assets are usually in the form of net realized and unrealized depreciation. It's distributions issued to participants who, let's say, were terminated or took hardship distributions. And you can also see administrative expenses. Next slide. So the main differences between employee benefit plan audit and an audit of a company's financial statements are outlined on this slide. And basically, in a regular audit, you could spend thousands of hours on that audit. And if it's a public company that you're auditing, you can spend 8 to 9 months at that client's location. While for employee benefit plan audits, we are usually budgeted from 40 to 160 hours per audit. And we are usually working simultaneously on many audits. It could be 20 or 30 audits at the same time. And this is attributable mainly to the fact that I would say about 80% of our, in 80% of our audits, we perform limited scope audits, because that complete and accurate certification that I've referenced before is available. And therefore, we do not need to test earnings, and we only test participant transactions mainly. And as Scott mentioned before, most of our work is performed from our office. And before COVID, we would go to Fieldwork for 2 or 4 hours per client, but we can also perform it remotely. And next slide, please. Another difference between employee benefit plan audits and regular audits is that our primary contact is HR, somebody from HR or payroll. We do occasionally occasionally our contacts can be CFOs, controllers, accounting managers. But for a regular audit, you have exposure to a great variety of contacts, especially when you test controls. It can be executives, controllers, HR, accounting, and other personnel. When you perform an employee benefit plan audit, our interns get exposure to an audit from the very beginning, from the very first stage of an audit, from planning to concluding. So our interns witness, they participate in preparing even engagement letters and planning communication letters. They make selections. They help us with testing participant transactions. They help us build the financial statements, and they also help us with preparing draft packages and final financials and sending them to the client. So as you can see, our interns and everybody else at the firm have exposure to all stages of the audit. While sometimes it's difficult to achieve when you work for a larger firm, because yeah, I mean, as Scott mentioned, we both had prior experience at a Big Four. So usually as a first year, you would be exposed to only testing certain accounts, which would be cash, accounts payable, OPEX and things like that. So, and only once you get to, let's say, senior or experienced senior level, that's when you get a wider exposure. And so that's one of the key variances between our audits and audits of a regular and audits the financial statements of a company. Next slide. Okay, well, I think it covers pretty much everything, not everything, but the majority at a high level, what we do at our firm and what employee benefit plan audits normally involve. And I think it's a good time for your questions, if you have any. And this is our contact information in case you have any questions afterwards. Feel free to email us or call us, and we will be happy to answer the questions you have as well.
I don't have a question, but I just wanted to say thank you for the comprehensive presentation to both of you.
Thank you.
You all got that, right? There's going to be a test. So.
Okay, I'll start off with the question then. I noticed you said that most of your audits are 401ks and not the other line items that you listed. Do you see any of the other line items slowly drifting away from corporations or businesses that you audit? And if so, why?
Excellent question, Chad. Yes. So in particular, defined benefit plans is the easy one to point out and saying that they're starting to phase out. Defined benefit plans by nature are very costly. So you aren't going to be getting your traditional pension plans that, say, your grandparents had back in the day and are retired off of now and still receiving payments. There's only very few industries that have them, but they tend to be, very generous. Those are essentially, typically they are, guaranteed retirement payments based off of your salary up to the last day as you retired with that company. You get paid that all the way to the date of death. So it's very generous in some ways because you get to essentially have your salary until you're done. So defined contribute, but that can be very costly because as technology and medicine gets better, people are living longer. And so companies are moving away from that just because it becomes, too costly for companies, especially if they have a very bad year financially. There are still required minimum funding requirements. So you have to continuously be putting money into the plan. If you have a bad year, say for 2020, a lot of companies are probably going to be hurting and putting enough money into the plan if maybe they don't have the cash, but it's a requirement to put that money in there. So what people are doing instead, other than 401k plans, is they're opening up another type of plan called the cash balance plan. From what I'm hearing, it's sort of similar. You still have actuaries involved, but you have a little bit more control as to changing provisions, and you still kind of have to provide some sort of notice as to how much money the employer is going to be putting into the plan on your account, but there's just more control over it, and it won't always break the bank if you're having a bad year.
Awesome. Thank you, Scott. It looks like we had a question in the chat from Chris, and he says, it's kind of a multi-question. He says, do you guys have a busy season? What are the hours like, and has COVID affected your busy season?
Sure, I'll take that. So yes, we do have a busy season, unfortunately. It is public accounting. And our busy season normally starts around May, I would say closer to the end of May, and it lasts until October 15th, which is the extended filing deadline for the majority of our clients, assuming they have 12/31 a year-end, plan year-end. The hours, I mean, yes, we need to work overtime, and I wouldn't say it usually comes in waves. At times we are busier, like let's say May, June, July are the busiest, and then it gets easier, and then the hours pick up again, and they remain high until October 15th. Whether COVID affected this busy season? Absolutely. In the sense that a lot of clients were dealing with all the regulations that, due to COVID, especially because our primary contacts are HR people or payroll people. So they were too busy, taking care of the audits. So they postponed the beginning of the audits, which of course presents its difficulties for us, because if all of our clients start their audits later during the season, it gives us less time to work on their audit. So we have a higher volume of audits we need to perform in a shorter span of time. So I think that answered the question.
Yeah.
Hello.
I'll add to it too. The busy season has added additional difficulty too, with COVID going on and working from home. Just working long hours while, say, at the house has added for additional challenges this year. Just on most people I've talked to, not just our firm, but even outside of the firm. And it's just been pretty rough in general.
Okay, I think we're going to take one more question. Carlos, I saw that you looked like you wanted to ask a question, so go ahead, Carlos.
All right, so my question revolved around data analytics. What programs do you guys use? Do you use like Excel, RStudio, and how has it affected your overall productivity?
So our analytics are very light. So we don't really need to bring in all the additional detailed analytics software. So we've built our analytics to really, it's all Excel for our case. And we're mainly doing comparisons to, industry data, as well as market performance, and just year-over-year comparisons, as well as relative size comparisons too. So an example would be if we're seeing a bunch of money leave the plan, and how big is the plan overall? Is it going to be more than 20% of the plan assets? Because that would be pretty significant for our purpose. It kind of gives us a heads up. Okay, we're going to have to ask more questions about why. And it also brings into other risk considerations. Plans specifically have something called a partial plan termination, which causes for some additional work to be involved, some additional disclosures, those sort of things. And that's where the analytics really tip us off and help us to ask the right questions.